Hi guys. Today we will analyze Paramount Global stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock was a bad performer in the overall market in the last year. The short-term trend is neutral, the long-term trend is neutral. Not much exciting going on here. Strong support level is around $28. Next strong support level is around $22. Strong resistance level is around $38. Next resistance level is around $43. In the last month the stock has been trading between $32.50 and $39.20 range. It is currently trading in the middle of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 12 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 2% per year, for last 5 years. We see that the average profit margin of the stock has been around 12% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 57% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Paramount Company: bad, average, and good. First scenario. Paramount will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be a low, 0%. Future profit margin would be a low, 11%. Future free cash flow to net income rate would be a low, 30%. In this case, the fair value of the stock today would be $20. Second scenario. Paramount will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 1.5%. Future profit margin would be average, 12%. Future free cash flow to net income rate would be average, 45%. In this case, the fair value of the stock today would be $35. Third scenario. Paramount will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 3%. Future profit margin would be high, 13%. Future free cash flow to net income rate would be high, 60%. In this case, the fair value of the stock today would be $53. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 6.94. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Paramount, analysts forecast growth rate around 3% per year in next 5 years, and future P/E around 13. Again, I will use 3 different scenarios for Paramount Company: bad, average, and good. First scenario. Paramount will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be a low, 0%. Future P/E would be a low, 8. In this case, the fair value of the stock today would be $24. Second scenario. Paramount will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 1.5%. Future PE would be average, 10. In this case, the fair value of the stock today would be $34. Third scenario. Paramount will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 3%. Future PE would be high, 12. In this case, the fair value of the stock today would be $46. As you can see, today the stock is fairly valued, $35, if we expect the company's medium-high performance in future. The fundamentals are decent. But based on estimates for the next 5 years, the company will show a very small growth in revenue, 3 to 5% per year. The stock looks fairly valued at the moment. Do your due diligence, you may like the stock at these levels. I may consider buying the stock for the dividend, 2.67% yearly, especially if the stock drops a few dollars more. Keep in mind that there are two Paramount stocks. Paramount Class A, ticker PARA.A. It traded at $38 yesterday. It gives you more voting rights, and a yearly dividend yield of 2.48%. Paramount Class B, ticker PARA. It traded at $35 yesterday. It gives you fewer voting rights, but a higher yearly dividend yield of 2.67%. It's up to you, which one to buy. It doesn't really matter. Class B is always $3 cheaper than Class A. Company's strengths. Paramount Global is an American diversified multinational mass media and entertainment conglomerate corporation. The company was formed through the re-merger of the second incarnation of CBS Corporation and the second incarnation of Viacom, and was previously known as Viacom-CBS before 2022. The company operates over 170 networks, and reaches approximately 700 million subscribers in approximately 180 countries. The company's main properties include the namesake Paramount Pictures Film and Television Studio, the CBS Entertainment Group, Media Networks, MTV, Nickelodeon, Showtime, and other, and the company's streaming services, including Paramount+, Showtime OTT, and Pluto TV. Some analysts believe that Paramount Global might be a prime acquisition target. Paramount Global has previously been linked to possible offers by large streaming providers like Amazon, Apple, and Comcast. Paramount has a return on assets of 8% and return on equity of 20%. This is amongst the best returns in the industry. Its profit margin of 15% is amongst the best returns of the industry. Risks. While Paramount Global is earning enough to cover the dividend payments, the cash flows are lacking. Debt level. The company's net debt-to-equity ratio, 49%, is considered high. Based on estimates for the next 5 years, Paramount will show a decrease in earnings per share. The EPS will decrease by -5% on average per year. The revenue is expected to grow by only 3 to 5% on average over the next 5 years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.